Hi, it's Mike Harris from LondonLivingTV. Today we're here with Stewart MacDonnell from RMA, Real Estate Mortgage Associates. I refer a lot of business to Stewart because he's always kind of come through. But Stewart, what are the top 3 things that people should know or would like to know about mortgage brokerage?
I guess the big thing is people think that we charge people for finding them a mortgage when in most cases we're free of charge with approved credit. So if someone has good credit, then there usually is never a charge on that. So the second big thing is we have a pool of lenders that are just not necessarily the big 5 big banks. They just are strict just for mortgages itself.
So are they institutional lenders as well?
Yes.
And the rates are comparative?
Normally they're usually lower than the top banks are out there. So they don't put pressure on you to open other bank accounts and things like that when you take out a mortgage with them, which a lot of times that can happen at a bank where they want you to take an account and open a line of credit and all that stuff. Right. So traditionally it's we have a bigger pool and it allows us then to access all of them at one point.
Right. So in that case, it's really just one application. It's not like if I go to Royal Bank and then I have to do an application, and if I go to CIBC,
that's
I have
correct.
to do an application. So you do one application and
that's correct.
You're good. So you're not running my credit rating 20 times?
No, it's just one credit bureau, and then we send that in with your application to all the lenders. They may pull an internal credit check, but it doesn't affect your credit report because it's internally done. It doesn't even show up as an inquiry on the credit report.
Okay. So are there lenders out there, if I've had bad credit in the past or whatever, are there lenders out there that kind of can help me with that?
That would be the third probably big thing with a broker is we have access to those type of lenders that specialize in that type of product for that client. So if someone has had some poor credit in the past and have maybe not enough reestablished credit that they could go to a regular bank, there are lenders out there that do specialize on that and have a short term to get and help you rebuild your credit, and then you're on your way.
Okay, nice. What about business owners? I know that, for me, that's always been a kind of a challenge, kind of helping a business owner. They go to the bank, and the bank doesn't really have the expertise to kind of
a lot of them don't carry those products. They ask for a large down payment or a lot of equity in the property allowing you, and they're not as flexible as people that do have maybe cash or a lot of write-offs on their account as a self-employed. So there are, again, lenders that are specifically, that's their main product, is they just deal with people that are self-employed.
Right.
And they don't ask for a lot of the same type of paperwork that the bank asks for. We send in a reasonable amount of income and, and we give some verification that they are self-employed. And then usually, the terms, again, you try to do something shorter term so someone doesn't have to be in it for a longer term so that they can get themselves to the point where we can maybe get them into a product that's a better rate or more flexible. Yeah.
One of the houses that I sold, we couldn't get financing, but we did come up with a lease-to-own solution, which seemed to work out really well. Maybe you can kind of share how that works.
That's a great product, actually, and it's kind of had a bad taste in people's mouths over the years because it's been mostly a vendor is holding the mortgage for the person you're leasing it from the person you're buying the property from.
Right. So these are actually institutions.
This is a company that specifies, this is what they do solely. And what it is great for is people that did have bad credit and they are going to be 2 to 3 years away from even being able to go to a bank to get a mortgage.
Correct.
But they want to buy now rather than rent. So they do a lease back or a lease to own, and they put their down payment down and basically pay a portion of their payment goes towards paying the mortgage. A portion goes into a savings account that basically builds up the equity so that in 3 years we have reestablished credit, we have enough equity in the property that we can go to pretty much 5 or 6 different lenders to take the mortgage as a purchase at that point.
What surprised me about that was actually how great the rate was.
Yeah,
the rate
it's
was
decent.
Actually pretty.
It's just a little over posted rate, so posted bank rate, so it's not bad at all.
Right.
Yeah, it's not like 20% or like a finance company or something.
No, actually, and it was all spelled out, and I was very impressed with the process.
Yeah.
Okay, so help me understand the process of dealing with a mortgage broker. So for example, if I were to refer somebody to you, typically I would sort of say, give Stewart a call, help me understand, or help the audience kind of understand the advantages and really the process,
Yeah.
and why it makes sense to go to a mortgage broker.
Well, it's very, very easy. So you can do it a couple different ways to take an application if you're referred. Usually what happens if someone refers me, I call them. I can either take the application over the phone, or if they have time, they can come to my office, or I can meet them somewhere at their house, any location really, to take their information, rather than have to schedule a set appointment at the bank.
Right.
And then they can do it online too. So they can actually go online and fill out an application. It gets emailed to me. It's all confidential, and I print it off. And then if I have further questions, I can either email them or call them or text them.
Okay.
So it's very flexible. And usually the time frame is once I get the application, you're pre-approved within 24 hours.
Okay.
Usually.
So that's awesome. So very fast, very convenient.
Very simple. Yeah.
Again, the bulk of the time, well, I would say a lot of the stuff that I refer to you is largely paid by the institution.
That's right.
Anybody kind of buying a house.
Yeah.
Really, the institutions out there want this business.
That's right.
And they pay you directly.
They pay me, and it's cheaper for them, a lot of the banks, and they can offer us a lower rate than sometimes they can get at going directly to the bank, because they don't have to pay an employee and CPP and all the deductions that they would have to pay a regular employee.
Right.
So
and how I kind of explain it to people, you've got the Royal Banks, the CIBCs, they've got buildings all over town. They've got brick and mortar shops where these guys are like in Toronto on the 35th floor or something. All they do is mortgages.
Yeah.
They don't have to worry about building.
Right.
They don't have to worry about staff. They don't
That's
have
right.
to worry about this. And so that being said, their core focus is mortgages.
Yeah.
And so they do it really, really well. In my mind, they often do it better in the bank. I myself have worked at TD, and I think you did as well. CIBC, I've worked at a couple of credit unions, and I've always been very impressed with how these mortgage institutions...
They're very efficient.
Right.
They got it down pat, they got the system set, and it's easy for them to process it.
Okay, so the mortgage is now set up. So who do they deal with at that point? They're dealing with the bank, they're dealing with you?
Once it's all done and set up, and the mortgage closes,
Yes.
normally most of the institutions send them a welcome package and say, here's our contact information. A lot of them have online access, so that you just, like TD Easy Web kind of thing.
Right.
Banking, you can go in there, see your mortgage, make a request to change it from weekly to bi-weekly, or pay a lump sum at a certain date, request a statement. All that stuff can be done through there.
Okay.
Or they can call them directly and
Like
speak to a person, 1-800 number.
Right.
Or they can, a lot of times we have a consent form that we can fill out, and we send that into the bank, and then I can find out all the information they need for them. So they could email me and say, I didn't get my statement yet for this year, can you look into it for me? And then I can do it.
Or I'm looking at making these changes, can you help me with it type thing?
That's right.
So a lot of these institutions are, arguably the same type of mortgage at the bank, 15 to 20% lump sum on the original balance a year.
Up to 100% more of your payments, or both,
Yeah, so let's say, and we're just sort of providing information, but let's say I set it up where it's a 20-year amortization, and I feel like, okay, I want to kind of back that off to like 25. All that stuff can be done.
That's right,
Yeah, so, and vice versa, I guess.
Yeah, the big thing too is, with a broker, I don't get paid any more or less if you take a 30-year or a 25-year.
Right.
Where sometimes, depending on the bank, they may want you to be into a longer period of time.
Right.
Because it's going to make the bank more money in the long run.
Right.
And so a lot of times they don't give you all the advice that maybe, not everyone, but they don't always give you the full money and the whole package of, this is what you should do, is set it up with this, but pay these payments, and
Like, I always try to be as gracious as I can with the banks, but quite often I'm finding every time I go to the bank, there's a different person.
That's correct.
Right, and that person last week was a teller, or something else, and then now this week they're doing mortgages. So
yeah, I've done it. It's very hard not to put them down, but it's very difficult for those people to be a specialist at investments, a specialist at mortgage, a specialist at loan, a specialist at a small business banking. They have to do everything, and they don't have the time all the time to effectively handle everything.
Effectively, or really get the knowledge.
Or to know everything.
Yeah.
You can't know everything. That's why people specify in a certain field, and
Right. The other thing that I kind of hit on, and again, I've worked at the large banks, so they don't need to be licensed and they don't need to be qualified, arguably.
Correct.
Where
For
you-
mortgaging and stuff, no.
Where you're licensed by the province, you're
That's right.
required to do courses, you're required to do more courses.
Yeah.
And I don't know what that's called, but basically
Yeah.
you've got to kind of keep up with the industry. Otherwise, you're not licensed.
That's right.
So you're licensed, you're regulated, all that
Mhm.
sort of stuff. At
That's
the banks, arguably they are because
They
they
do some
have
training, but
yeah.
they don't have to actually get licensed to do anything other
That's
than, you know, investments and things like that.
Right,
That's different, yeah.
right.
Yeah.
But, the other big thing is, and what I like to say when I'm selling houses is, hey, sometimes you can buy more with less.
Mhm.
What I sort of say is, hey, if you can actually save money on your mortgage and
Mhm.
reduce that monthly payment, you can get a bigger house or make
Mhm.
the house that you're looking at more affordable.
That's right, yeah.
Okay, excellent, Stuart, I really
Okay.
appreciate it.
Yeah, no problem.